Hello again, everybody. This is Matador from freetrainingvideos.com. It's 12:30 p.m. Friday, December 4th. Happy Friday to you. And the S&P ETF, if we're looking at the spiders, had a beautiful gap up this morning on the jobless numbers, and we retested the 112 mark. I had said around 8:30 or so to watch out for how the market was going to digest the news that we got, and beautiful. It ran right up into the 112 mark, even broke that during the market hours. Pulled back though, we'll see why in just a moment. This is a fantastic run to the 112.20 mark, which is past even the highs of yesterday and the day before, of course. And so just a little 3-minute chart, we saw a swing high occur, interesting sell-off, and then a consolidation right at the 50-yard line of the open to the high. Of course, from the gap to the high, that's considered a high base slash symmetrical triangle, and that actually broke down right into an area of support at the 111.50 area, that 111.60, and then it really broke hard from there, many bars down in a row, right to the next level of support. And if you look at a higher time frame, that is a perfect gap fill at the 110, and so I was looking for the 110 mark to hold, and the low of that bar was 110.04, so 4 cents shy of that round number. Nice bounce, but if you drop in some retracement lines on this, and we'll see what we are at right now. That's a 38% retracement, not even up to the 50-yard line yet. So if it rolls over right now and starts bouncing along the 110 mark, I would start viewing that as a bearish scenario. If, however, we do run up to the 50-yard line or put in a higher swing low after a sell-off, then I would start looking for the markets to start chewing through and again pass through the 111 even mark. And that's going to be a very telling number as well. So all in all, when we're looking at this, a good reason not to go long at the open of something like this, right into all that, even though exuberance is high, is the VIX was actually dropping beautifully, and that's what we want to see, but it was dropping right down into a level of support from a previous swing low in there, which sort of corroborated with the swing high, and many bars up in a row, many bars down in a row for the VIX. And what I would rather have seen instead of buying long into that is waiting for that to chop around and then fail. Ultimately, the broad markets would have chopped around on their high and broken out to the upside. In this scenario, that did not happen. In fact, we got a good size sell-off to even past the high. So that is what I'm watching with the VIX right now. It doesn't matter if you're looking at a 3-minute chart or a 15-minute chart. It just it's longer-term data. So good stuff. With a TRIN, something interesting happening here. Zoom back out. The TRIN itself is at 0.83. All right, so it's still right in the neutral range, just a tiny bit more bullish than bearish. The TRIN Q, however, is at 1.05, right in the middle of the neutral range. So that sort of states a consolidation is in order. And again, the VIX is dropping nicely right now, but it still has run up fairly hard on the sell-off that we saw with the spiders. So that does confirm this sell-off. So watch the 38% mark. Watch the 111 even number here on the spiders again, and see if we can break out above the 50% retracement line going forward into this Friday. Also, stay tuned for D7's video at the close. And once again, nice working with everybody this week. Had a good time with you. So take care, everybody. Talk soon.